Hi, this is Paul from globaltradingsoftware.com, and this is my first trial at actually playing through some trading opportunities using our range breakout. I'm going to play it forward, and we're going to use the manager to manage the trade, this ribbon here and the dots. Plus also just keep an eye out on that bias depth indicator here. At this moment in time you can see it's all red, so we're only looking really for shorts. The bias down 6 different time frames is bearish. So let's play this through. What we're looking for is the European gold pit opening range, the London Stock Exchange opening range, and then into the New York gold pit open, which are very, very prevalent for these currencies. So it's not just currency futures, you can use these for forex. So let's play this forward, talk through and highlight some major points. So the first thing we're waiting for is the European opening range. Now that opens, but when the candle closes, the tag is yellow, so there's no real bias to whether it's bullish or bias, so we don't take a trade at this point. We're patient and we wait for the London Stock Exchange open. When that opens again, we're looking for that bias. In this case it's going to be red, so we're looking for the short breakout trades here, and there it goes. Every one of these candles is actually 10 minutes, so it doesn't happen this fast. We go down. Now you see the ribbon on the manager is red, so it's telling us to stay in, but also we need to keep an eye out on these dots above and below the candles. The ones up above are higher than average volume. If we get some bullish candles with higher than average volume, this is an aggressive exit here. So we will just keep an eye on this. It's just coming down now, and then I'm going to pause the video just as we get the rejection there and discuss here. Okay, so right now we had this first candle here. Although it was a down candle, it retraced 50%. So this is the manager telling you what the behavior is. It's retraced 50% and it's higher than average volume. So that's a high volume rejection. What happens next is an indecision doji with higher than average volume, green candle this time. So be ready to get out. Remember, each one of these candles is 10 minutes. Then the next candle is an up candle. It's grey. Okay, so it's not as high volume as that previous candle, but it's still higher than average volume with this dot up above. So this is the aggressive exit here. When the next candle opens here, you take your profit with that aggressive exit. Now the conservative trade management approach to this breakout trade is to wait for this ribbon, which is 4 candles in advance, to turn green. So let's just keep playing that forward and discuss that. So sometimes the aggressive entry is really good. It maximizes those profits, but you'll see eventually when this cloud does eventually turn green, it's probably around about, in this case, the same sort of price there. So it's a little bit higher, so the aggressive would have been a little bit easier, but you can see here, once we get a candle close and we get that ribbon turning green, we will look to take that conservative profit here, which is probably pretty much the same. We're just waiting and waiting really until you see how that really changes quite quickly. So again, aggressive entry with that behavior from the manager. Now what we're waiting for is the New York Stock Exchange open. There it is. It's printed in green label, and we look for the long breakout here. We go long, we break out, look at the manager, it's still green. It's green now, so we're looking for the long. Looking for that pullbacks. We had one candle with higher than average volume, down candle, and then it ran out. And this is where we are right now. Okay, so very, very simple. Using that breakout strategy with defining the opening range, defining what's the bullish buy, whether it's bullish or bearish bias, and looking for that short breakout in this case, and then a long breakout in that case, and then using the manager to manage that trade. Hopefully that helps. Speak to you all really soon.